Forex Trading Questions. Chapter 1 Custom Indicators Required. Q&A. 1. Question. What are the essential indicators required for this trading method? Answer. The essential indicators required for this trading method include multiple moving averages, custom indicators provided in the downloadable package, and a specific custom MT4 indicator called the Iparamon work time. 2. Question. How can I customize my trading platform to match your charts? Answer. You can customize your trading platform by downloading the MT4 template included in the package at the end of the book, which will ensure your charts look the same as the author's. Alternatively, you are free to design your own charts if you prefer a different style. 3. Question. Is it important to use the custom spreadsheet provided? Answer. While the customized Excel spreadsheet is not essential, it can greatly assist you in managing multiple trades and following the specific trading strategies mentioned later in the book. 4. Question. What should I do if I encounter problems loading indicators or templates? Answer. If you encounter problems loading indicators or templates, refer to the detailed instructions provided in the Read This First document included in the download package. If issues persist, you can reach out to the author for support. 5. Question. Can users of different operating systems access the trading materials? Answer. Yes, users of different operating systems can access the trading materials. For Mac users specifically, there are additional instructions provided regarding the installation of templates, as some users have reported challenges with the process. 6. Question. What advice is offered to Mac users trying to install MT4? Answer. Mac users are advised to consider using a program called Play on Mac to install MT4. They should also ensure they copy and paste the indicator files correctly within the designated folders in the Wine library rather than transferring files directly. 7. Question. How can I get help if I need further assistance with Mac-related issues? Answer. If you need further assistance with Mac-related issues, you can ask for help in the author's Facebook group, where other users or the author may be able to provide support. 8. Question. What is the advantage of using the Iparamon work time indicator? Answer. The Iparamon work time indicator can help traders optimize their strategies by indicating the best times to trade, although it's not essential to the method. Chapter 2 My Thoughts About Indicators Q&A. 1. Question. What is the main critique of indicators in trading, and how can they still be valuable? Answer. The main critique of indicators is that they lag behind price movements, meaning they reflect trends after they have already occurred, often leading to missed opportunities. However, when used in conjunction with one another and in a broader trading strategy, they can provide valuable insights and confirm signals that assist traders in making informed decisions. 2. Question. Why is understanding personal trading style important? According to Jim Brown? Answer. Understanding your personal trading style is essential because what works for one trader might not work for another. Each trader has different opinions, risk tolerances, and mental nuances that affect trading decisions. Finding a method that aligns with your individual temperament and comfort can lead to greater success and consistency. 3. Question. What does Jim Brown mean by the whole package in trading? Answer. The whole package refers to the comprehensive approach to trading that encompasses not just technical strategies, but also aspects like money management, health and well-being, emotional state, and adherence to a trading plan. This holistic view supports better decision-making and emotional resilience in the trading process. 4. Question. How does Jim Brown suggest traders should handle trade entries and exits? Answer. Jim Brown recommends that traders focus on having clear and definite rules for trade entries to avoid second-guessing themselves when they make decisions. While he places more importance on clearly defined entries, he acknowledges that exits are influenced by various factors that will be addressed later in the book. 5. Question. What does the phrase patience, courage, and discipline signify in the context of trading? Answer: this phrase encapsulates key qualities traders must cultivate. Patience indicates waiting for the right trade setup. Courage is about taking the trade when it presents itself, despite potential anxiety, and discipline emphasizes the importance of sticking to one's trading method and maintaining comprehensive self-management. Chapter 3: Trading with the Trend and Trend Identification Q&A 1. Question: what is the principle behind trading with the trend? Answer: the principle of trading with the trend involves taking positions in the direction of the prevailing market trend. If the trend is upward, traders look for pullbacks or retracements to buy, anticipating the trend to continue rising. Conversely, if the trend is downward, traders wait for pullbacks to sell, expecting the downward movement to persist. 2. Question: how can one identify a major trend in the market? Answer: a major trend can be identified by using a combination of indicators, such as moving averages, MAs. Specifically, the use of the 50 EMA, 100 EMA, and 240 EMA can help determine the trend direction by observing how these moving averages are stacked. When they are properly aligned, it becomes clear whether the market is in an uptrend or downtrend. 3. Question: what is the advantage of using multiple time frame filters in trading? Answer: using multiple time frame filters, like the QMP filter designed with built-in higher time frame analysis, provides additional confirmation for trade signals. This is particularly useful when trading on lower time frames, enhancing the accuracy of the entries by ensuring alignment with the overall trend indicated by higher time frames. 4. Question: what is a QMP filter, and how does it enhance trading decisions? Answer: the QMP filter is a custom indicator designed to simplify the visual analysis of trade signals on the price chart. It combines signals from the QQADV and MACD Platinum indicators, helping traders identify when the indicators are in sync. This allows for clearer decision-making and enhances the probability of successful trades. 5. Question: why might a trader choose to swim against the trend, and what are the potential risks? Answer: a trader might choose to trade against the trend to capture short-term market movements that could lead to profits. However, this approach carries significant risks because it goes against the prevailing market momentum, increasing the likelihood of losses if the overall trend continues. 6. Question: what should a trader do if the moving averages are not stacked? Answer: if the moving averages are not stacked, indicating a lack of a clear trend, the trader should refrain from trading that currency pair and look instead for other pairs where a discernible trend exists, thereby improving the chances of successful trades. 7. Question: how important is technical analysis in identifying trends in Forex trading? Answer: technical analysis is crucial in identifying trends in Forex trading, as it allows traders to visually assess market behaviors through indicators like MAs, MACD, and QQE. By using these tools, traders can make informed decisions based on historical price movements and patterns. 8. Question: what are the key indicator settings mentioned for effective trading in this chapter? Answer: the key indicator settings mentioned include the default parameters for QQADV 1, 8, 3, and MACD Platinum 12, 26, 9, which are essential for the QMP filter to function effectively and provide reliable trade signals. Chapter 4: what your chart should look like. Q&A 1. Question: what is the significance of using a higher time frame filter in Forex trading? Answer: the higher time frame filter provides a broader context for trends, helping traders align their strategies with the prevailing market direction. By using this filter, traders can identify more reliable signals, such as upward or downward pointing yellow arrows on their charts indicating whether to consider buy or sell trades based on confirmation from higher time frame analysis. 2. Question: how do the moving averages and QMP filter work together on a chart? Answer: the moving averages provide insight into the direction and strength of a trend, while the QMP filter offers specific entry and exit signals through color-coded dots. Together, They allow traders to visually confirm the trend and make informed trading decisions, ensuring that trades are taken in the direction of the established trend. 3. Question. What should a trader do in case of conflicting signals on the chart? Answer. When faced with conflicting signals, such as a downtrend indicated by moving averages while the QMP filter shows an upward arrow, it is advisable for traders to refrain from entering trades. Instead, they should wait for clearer, more consistent signals. This approach minimizes risk and enhances decision-making, ensuring that trades are made with confidence. 4. Question. Why is it important to trade with the trend? Answer. Trading with the trend maximizes the likelihood of success as it aligns trades with the dominant market movements. By following the trend indicated by the moving averages and confirmed by the QMP filter, traders can make more informed decisions, increasing their chances of profitability while minimizing potential losses. 5. Question. What does the appearance of yellow arrows indicate on the chart? Answer. The yellow arrows appear when the higher time frame filter is activated and correspond to the trend signals from the higher time frame charts. An upward yellow arrow represents bullish sentiment, a blue dot on the daily chart, while a downward arrow signals bearish sentiment, a red dot on the daily chart. These arrows serve as visual cues for traders to reinforce their trading decisions based on higher time frame analysis. 6. Question. How can traders set the higher time frame filter on their charts? Answer. Traders can set the higher time frame filter by navigating to the Indicators Inputs tab and entering their desired time frame in the field labeled Higher Time Frame. This adjustment allows them to see relevant yellow arrows that assist in confirming trend direction for their trading strategy. 7. Question. What does Jim Brown suggest about trading during uncertain signals? Answer. Jim Brown suggests that traders should be cautious and consider stepping aside during uncertain signals to avoid unnecessary losses. Instead of forcing trades in unclear situations, it's better to switch focus to other currency pairs or wait for clearer trends to emerge. Chapter 5. Looking for trade entries. Q&A. 1. Question. What signs indicate it's time to consider a buy trade in a chart showing an uptrend? Answer. In an uptrend, look for blue dots forming on the MACD platinum below the zero level as a potential indicator for a buy trade. The confirmation of the QMP filter blue dot is essential before executing the trade. 2. Question. How do you know when to enter a trade after identifying the array of dots on the MACD and QMP filter? Answer. You should take the buy trade on the open of the new candle, but only after the QMP filter blue dot is confirmed by the closing of the current candle. 3. Question. What is the role of the QQADV indicator in relation to the QMP filter dots? Answer. The QQADV indicator acts as a warning for imminent QMP filter dots by showing a potential cross, helping you anticipate when the QMP filter dot will appear. 4. Question. How does the approach differ for identifying sell trades compared to buy trades? Answer. For sell trades in a downtrend, you look for red dots forming on the MACD platinum above the zero level, followed by a confirmed red dot on the QMP filter reversing the process used for buy trades. 5. Question. What should one keep in mind about the trading system described in this chapter? Answer. While the methods outlined are simple and often effective, they are not infallible. Understanding trade management and being aware of potential pitfalls are crucial for success. 6. Question. What does the author suggest doing with the provided indicators and templates? Answer. The author strongly recommends applying the provided template to multiple charts across various time frames to explore the trading setups and gain insights into their effectiveness. 7. Question. What key message does the author convey about the nature of trading systems? Answer. The key message is that while trading systems can yield a high volume of successful trades, one must remain mindful of their limitations and approach trading with sound Risk and Trade Management Strategies. Chapter 6 Method and 1. Lower Risk. Q&A. 1. Question. What is the importance of placing a stop on each trade in Forex trading? Answer. Placing a stop on each trade is crucial because it helps to manage risk effectively by setting a stop at a strategic point like just above/below the high/low of the signal candle or at a recent fractal. You protect your capital from excessive losses. It ensures that you have a clear exit plan before entering the trade, which mitigates emotional decision-making during trade fluctuations. 2. Question. How can traders identify when the market trend is exhausted? Answer. Traders can identify when the market trend is exhausted by monitoring signals from indicators like the MACD Platinum. In a perfect scenario, this indicator shows alternating dots on either side of the zero level, sell to buy, which indicates strong signals. Once the trend starts to show signs of reversal with the dots not following the previous pattern, it signals that the trend may be exhausted and should be addressed with caution. 3. Question. What strategies can traders use to manage open trades according to the method described? Answer. Traders can manage open trades using several strategies, such as a hard profit target, which sets a specific level to close the trade, or a trailing stop that adjusts as the price moves favorably. They can also utilize Fibonacci retracement levels, support and resistance levels, or pivot levels to decide when to exit trades. Each method gives the trader flexibility in how to secure profits and minimize losses. 4. Question. Why is it considered smart to manage each buy and sell signals separately? Answer. Managing each buy and sell signals separately allows traders to maintain a clear perspective on each trade's performance without being influenced by the others. This method helps to isolate risks and outcomes, ensuring that a downturn in one trade does not impact how another trade is handled. It fosters disciplined trading as each decision is made based on individual analysis rather than a cumulative feeling about the market. 5. Question. What should a trader do when the trend changes direction according to the text? Answer. When the trend changes direction, as indicated by the MACD Platinum signals, a trader should exit all open trades that are against the new trend and refrain from entering new trades until a new trend is identified or the original one resumes. This approach preserves capital and reduces the risk of losses that arise from trading against the market direction. 6. Question. What does it mean to trade from each side of the MACD Platinum when the trend is flat or undecided? Answer. Trading from each side of the MACD Platinum in a flat or undecided trend means that the trader takes buy and sell signals when the MACD doesn't indicate a clear direction. This strategy seeks to profit from small price movements in either direction until a definitive trend emerges. It can be a more aggressive approach, requiring careful risk management as the market can become unpredictable in such conditions. Chapter 7 Method and 2. Higher Risk. Q&A. 1. Question. What is the primary warning associated with Method No. 2 in Forex trading? Answer. Method number 2 requires excellent money management skills as it involves adding to a losing position, which can lead to significant losses if not managed properly. 2. Question. How does method number 2 typically operate when entering a trade? Answer. You enter a sell trade when the indicators signal a downtrend without a hard stop loss or with a major catastrophe stop loss placed far from the entry point. 3. Question. Can you explain the reasoning behind not setting a hard stop loss in method number 2? Answer. Not setting a hard stop loss allows more flexibility to adjust your trade as market conditions change and avoid being prematurely stopped out when a trend may still continue. 4. Question. What kind of trading positions might a trader find themselves in using method number 2? Answer. A trader may find themselves in a basket of trades with increasing position sizes asymmetrically, similar to a Fibonacci sequence of trade sizes. 5. Question. Why is it important to keep track of multiple trades and their sizes? Answer. Tracking helps identify the overall break-even point and manages risk better since the combined position affects the trader's exposure to market movements. 6. Question. What should a trader look for to mitigate risk after executing a trade sequence? Answer. A trader should continuously seek opportunities to exit at overall break-even, particularly after a significant divergence between trades, which indicates a potential trend reversal. 7. Question. What is the benefit of taking a hedge trade according to the chapter? Answer. A hedge trade can lock in a loss and protect against further downward movement, allowing the trader to wait for a more favorable opportunity to re-enter the market. 8. Question. What has the author discovered about high-risk trading? Methods based on live testing? Answer. The author suggests that high-risk trading methods should only be used when there is an initial confirmed trend or setup, emphasizing the need for careful evaluation through historical charts. 9. Question. What resources does the author provide for further understanding of method number 2? Answer. The author refers readers to videos on their YouTube channel that explain the high-risk trading method in more detail. 10. Question. What mental challenges might a trader face using method number 2? Answer. Traders may experience stress from holding multiple trades in a direction contrary to their expectations, especially when indicators do not align with market movements. Chapter 8. The theory behind the method Q&A. 1. Question. What is the core idea behind the MCD Platinum method discussed in Chapter 8? Answer. The core idea is that the MCD Platinum indicator tends to revert back to the zero level after moving away from it, similar to a rubber band that snaps back to its natural state after being stretched. This behavior highlights the consistent oscillation around the zero level, making it a potentially reliable tool for identifying trading opportunities. 2. Question. How should one approach trading with different currency pairs like NZD/CAD and pounds sterling to Japanese yen? Answer. With pairs like NZD/CAD, which usually exhibit low volatility, traders can confidently take trades in various directions without worrying excessively about the trend. In contrast, pound sterling to Japanese yen, known for its large directional moves, requires traders to align with the prevailing trend, as it may present greater risks if one disregards market direction. 3. Question. What is Jim Brown's message regarding developing one's own trading style? Answer. Jim Brown emphasizes that while he provides a framework for a trading method, it is vital for traders to find their own approach. He encourages readers to adapt his ideas, use his indicators, and integrate their preferences to develop a trading style that suits them personally. Mastery of a single method is essential, as comfort and proficiency lead to better trading outcomes. 4. Question. What advice does Jim Brown offer regarding practice before trading with real money? Answer. Jim advises against risking significant capital until a trader has achieved comfort and proficiency with their chosen method. This can be accomplished through extensive practice with historical charts and forward testing on demo or small live accounts. 5. Question. How important is familiarity with trading patterns for successful trading? Answer. Being intimately familiar with the patterns or movements of a financial instrument is crucial for successful trading. Traders should know what to expect based on past behaviors, which requires both experience and extensive engagement with their chosen trading approach. 6. Question. How can historical chart time and forward testing contribute to a trader's success? Answer. Historical chart time allows traders to observe and learn from past movements of currency pairs, helping them to recognize repeating patterns. Forward testing on demo or small live accounts provides practical experience, reinforcing the lessons learned from chart analysis and boosting confidence to trade effectively when real money is at stake. Chapter 9. Things to consider using method No. 1. Lower risk Q&A. Question. What is the significance of the price being near moving averages, MAs, when considering a trade signal? Answer. The trading signals tend to be stronger when the price is close to or has recently touched the MAs. A trade signal that appears when the price is far from the MA may lead to a missed opportunity, as it is likely that the price will revert back towards the MA, presenting a better entry point later. Question. Why is it advised not to take every trade signal that appears? Answer. Traders are encouraged to focus on high-quality setups rather than taking every signal. This approach helps in managing risk and increasing the chances of a successful trade. Question. How can trend lines enhance trade decisions according to method number 1? Answer. Trend lines can help traders identify critical points where price movements may occur. By only taking trade signals when a trend line is broken, traders can improve their decision-making, particularly in identifying potential reversals in the market. Question. What should a trader consider when drawing trend lines? Answer. Traders should find a method that works for them without being overly precise. Whether taking the extreme highs or lows, or focusing on the bodies of candlesticks, while ignoring wicks, consistency is key. Each trader may have a different style, and it's important to use what feels easiest and most effective. Question. How can identifying and using trend lines simplify trading strategies? Answer. Using trend lines simplifies trading by providing clear points of entry based on market behavior. When a trend line is broken, it indicates a shift in momentum, allowing traders to act on significant changes rather than relying solely on complex indicators. Question. What might happen if a trader draws trend lines too rigidly? Answer. Rigidly drawn trend lines can lead to missed opportunities or incorrect signals. Trading is an art as well as a science. Being flexible and intuitive with trend lines allows for better interpretation of market dynamics. Question. How can the use of candles in charting influence a trader's performance? Answer. Using candles helps traders to visually assess price action more effectively. Candlestick bodies represent the range of trading within a period, while ignoring wicks can streamline focus on the most relevant price movements, which can enhance decision-making. Question. What is the impact of a trend line break on market sentiment? Answer. A trend line break often signals a shift in market sentiment, either indicating a reversal or a continuation of trends. This information can be crucial for traders to capitalize on new market conditions. Chapter 10 Divergence Q&A 1. Question. What is divergence in Forex trading and why is it important? Answer. Divergence in Forex trading refers to a situation where the price of a currency pair moves in one direction while a technical indicator, like the MCD Platinum, moves in the opposite direction. This discrepancy suggests a potential reversal or change in trend, making divergence an important confirmation tool for traders. Recognizing divergence can help traders anticipate market movements and make informed decisions. 2. Question. What are the two types of divergence mentioned in the chapter? Answer. The two types of divergence mentioned are regular or standard divergence and hidden divergence. Regular divergence typically signals a potential trend reversal, while hidden divergence can indicate the continuation of a trend. Both types are essential for traders looking to refine their entry and exit strategies. 3. Question. How should a trader use divergence in conjunction with other tools? Answer. While divergence can be a powerful signal, the chapter advises combining it with other forms of confirmation, such as candlestick patterns, support and resistance levels, or Fibonacci retracements. For instance, if a trader notices bearish divergence alongside a resistance level, this could strengthen their conviction to sell. 4. Question. Can divergence be used as a standalone trading signal? Answer. Although divergence can provide reliable signals, the author expresses reluctance to use it as a standalone tool To enhance decision-making, it's recommended that traders look for additional confirmation before acting on the signals generated by divergence. 5. Question. Is the concept of divergence covered in other works by Jim Brown? Answer. Yes, Jim Brown has dedicated a third book to the concept of divergence titled Trading Forex with Divergence on MT4/MT5 and TradingView. This book delves deeper into the various types of divergence and provides numerous trade setup examples for traders interested in this method. 6. Question. How can traders integrate divergence into their existing trading methods? Answer. Traders are encouraged to review the divergence technique and explore how it can complement their existing strategies, whether they rely on Gann analysis, candlestick patterns, or any other approaches. For example, a trader who traditionally uses Fibonacci levels might incorporate divergence to validate entry points when the price approaches a key fib retracement level. 7. Question. What personal methods does Jim Brown still use in his trading? Answer. Jim Brown mentions that he still employs Gann analysis based on swings and retracements, and he also utilizes the Fibonacci tool on daily charts to gauge price levels and potential future movements. This suggests that even with the advent of new techniques, foundational methods can remain valuable in a trader's toolkit. Chapter 11. Trade Management and Exit. Q&A. 1. Question. What is the most critical aspect of trading according to Jim Brown in Forex Trading, Chapter 11? Answer. The most critical aspect of trading, as emphasized by Jim Brown, is trade management and exit strategies, not merely the initial entry point. 2. Question. Why do traders struggle to cut losers quickly and let winners run? Answer. Traders struggle to cut losers quickly due to the human aversion to losing money and the psychological pressure to hold on to losing trades. Conversely, they often take profits too early due to a fear of losing out on potential gains, leading to a conflict that impacts decision-making. 3. Question. What is one of the primary rules for money management in trading according to Jim Brown? Answer. A fundamental rule for money management is to risk no more than 1% to 2% of your account balance on a single trade. 4. Question. How can traders manage their stops according to Jim Brown? Answer. Traders can manage their stops by placing them at recent highs or lows, using technical indicators like moving averages or drawing from fib levels, pivot levels, or other significant price action points. 5. Question. What should traders do if they find themselves repeating mistakes in their trading strategy? Answer. If traders repeat the same mistakes multiple times, they should reassess their strategies and make necessary adjustments to avoid falling into the same traps. 6. Question. What advice does Jim Brown give for ensuring you don't risk too much while trading? Answer. Jim Brown advises to keep position sizes small and manageable, ensuring that you can comfortably handle trades without excess stress or losing sleep at night. 7. Question. How can traders ensure they have enough capital to continue trading after losses? Answer. Traders can ensure they have enough capital to continue by keeping position sizes small, thereby safeguarding their account and allowing them to trade another day even after experiencing losses. 8. Question. What role does psychological resilience play in trading according to the chapter? Answer. Psychological resilience is crucial in trading as it helps traders make rational decisions under pressure, manage fear and greed effectively, and maintain discipline in adhering to their trading plans. 9. Question. What is the importance of conducting personal testing in trading? Answer. Personal testing is important as it allows traders to find what strategies and risk management techniques work best for their own trading style, rather than being swayed by popular opinions or crowd mentality. 8. Question. How do you define a successful reentry into a trade? Answer. A successful reentry occurs when the trader aligns with market momentum after a strategic assessment of the trade setup and proper adjustment of risk management measures. Chapter 12 RE Entries and Use of Trend Lines Q&A 1. Question: what should you consider if you are stopped out of a trade but still believe in the original setup? Answer: don't disregard the trading opportunity. Instead, look for a re-entry point by placing a buy or sell stop order to automatically enter the trade again if price moves in your favor, or wait for a confirmed break of a trend line. 2. Question: how should you adjust your strategy after a stop out? Answer: reassess your stop-loss position and adjust your position size to comply with your money management plan. 3. Question: what is the difference between a market order and a stop order? Answer: a market order is executed immediately at the current price, while a stop order is set to fill at a specific price level once the market reaches it. 4. Question: can you explain the purpose of buy limit and sell limit orders? Answer: a buy limit order is for entering at a lower price than the current market, anticipating a reversal, while a sell limit order is for entering at a higher price, also anticipating a reversal. 5. Question: why does the author prefer using stop orders over limit orders? Answer: the author prefers stop orders because they align with the trend direction, as predicting market reversals is inherently uncertain. 6. Question: how can trend lines assist in re-entering a trade? Answer: using a trend line can provide a visual confirmation point for re-entry. Waiting for a confirmed break of the trend line indicates a potential favorable market movement for re-entry. 7. Question: what psychological mindset should traders maintain after a stop out? Answer: traders should maintain resilience and not get discouraged. Each stop out is an opportunity to carefully reevaluate and potentially re-enter a trade with a strategic plan. Chapter 13 When to exit a trade Q&A 1. Question: when should a trader consider exiting a trade? Answer: exiting a trade should be based on your specific targets, either a predetermined profit level, or when certain market indicators suggest a potential trend change. It's essential to adapt to market behavior, recognizing the signs such as MACD platinum crossing the zero level or the appearance of colored dots indicating possible trend reversals. 2. Question: how can I determine if my exit strategy is effective? Answer: an effective exit strategy should align with your trading goals. If you regularly secure profits while limiting losses based on methods like trailing stops or Fibonacci levels, your strategy is functioning well. Also, pay attention to your trading psyche. Feeling secure about your decisions can be a strong indicator of a solid exit strategy. 3. Question: what are the risks of being greedy in trading? Answer: being overly greedy can lead to missed profit-taking opportunities and can expose you to larger losses if the market reverses unexpectedly. It's crucial to strike a balance between capitalizing on trends and knowing when to secure your gains. 4. Question: what is the importance of using market indicators like MACD? Answer: indicators like MACD provide traders with visual cues to assess market momentum and potential reversal points, effectively guiding them on when to exit trades or adjust their stop-loss. They help ground trading decisions in analytical data rather than emotions. 5. Question: how does scaling out of trades benefit a trader? Answer: scaling out allows traders to realize profits while still keeping a portion of their position in the market for potential further gains. It can reduce overall risk and improve the trading experience by securing profits and leaving fewer emotions tied to the remaining position. 6. Question: what methods can traders use to decide on exit points? Answer: traders have various methods to decide exit points, including setting specific profit targets, like a predetermined pip count, using trailing stops based on technical levels, or following indicator signals like moving average crosses. Ultimately, it's subjective and should conform to each trader's strategy and risk tolerance. 7. Question: what role does the trader's personal goals play in exit strategies? Answer: a trader's personal goals significantly influence their exit strategies, whether aiming for steady income, significant capital growth, or risk management. These objectives shape decisions on when to take profits or cut losses to align trading results with their lifestyle desires. 8. Question: How can market conditions affect my exit strategy? Answer: market conditions such as volatility, major economic news, or shifts in market sentiment can drastically affect exit strategies. Traders should remain flexible and adjust their strategies accordingly, reacting to these conditions rather than strictly adhering to predetermined plans. 9. Question: why is it important to move your stop loss to break even? Answer: moving your stop loss to break even ensures that you cannot incur a loss after a trade has moved sufficiently in your favor, thus significantly reducing emotional pressure and allowing you to trade more freely without fear of losing capital. Chapter 14: Shorter Timeframe Trading. Q&A. 1. Question: what is the advantage of trading on longer time frames instead of shorter ones? Answer: reading on longer time frames, like daily or weekly charts, can provide a clearer picture of market trends and reduce the stress of constant monitoring. It requires less frequent decision-making compared to shorter time frames, allowing for more strategic planning that can lead to better profitability. 2. Question: how can time-constrained traders effectively engage in Forex trading? Answer: time-constrained traders should consider focusing on specific trading sessions, such as the London or US sessions, and utilize tools like the Forex Factory Calendar to stay updated on market news that can impact currency pairs. 3. Question: what is a practical tool mentioned for monitoring trading times? Answer: the Iparamon Work Time Custom Indicator allows traders to visually identify their trading session times on their charts, helping them to stay organized and focused on their trading strategy. 4. Question: why is it essential to be aware of major news releases during trading? Answer: major news releases can significantly affect currency prices. Being aware of these releases allows traders to prepare for sudden market movements, ensuring they can react quickly to protect their positions. 5. Question: what is the importance of the Forex Factory Calendar? Answer: the Forex Factory Calendar is a valuable resource that helps traders plan their trading sessions by providing information about upcoming economic events and news releases tailored to the trader's specific time zone and trading interests. 6. Question: what does it mean to trade the lower time frames? Answer: trading the lower time frames refers to focusing on charts that represent shorter periods of time, such as 5 or 15 minutes. These trades require faster decision-making and can be more affected by immediate market volatility. Chapter 15: Trade Position Size Q&A. 1. Question: what is the primary strategy for managing trade position sizes for beginner traders? Answer: beginner traders should start with small lot sizes to get comfortable with trading. This allows them to gain experience without risking significant capital. As they become more confident and their account balance grows, they can increase their position sizes while maintaining a constant risk percentage on each trade. 2. Question: how should a trader approach multiple trades in the same direction? Answer: when taking multiple trades in the same direction, a trader should still begin with small positions. It's important to implement strict money management to consider the maximum risk involved. If the market moves unfavorably, the potential for amplified losses increases, so careful monitoring and decisive action are crucial. 3. Question: what is the double-edged sword theory in trading? Answer: the double-edged sword theory refers to how higher rewards in trading often come with higher risks. While it's possible to achieve significant profits from multiple trades in the same direction, there is also the risk of substantial losses if the market moves against the trader. 4. Question: what defines a smart trading decision in the event of an overall break-even scenario? Answer: a smart trading decision in this scenario involves closing out all open trades when the price reaches a break-even point, rather than freezing and doing nothing. This proactive approach allows the trader to take a loss at a break-even level rather than risking further losses as the market moves against them. 5. Question: why is time frame important when making trading decisions? Answer: time frames are important because they dictate the amount of time a trader has to make a decision. On smaller time frames, decisions must be made quickly, which can lead to confusion and impulsive actions. Conversely, higher time frames, such as 4-hour or daily charts, provide traders with more time to analyze the situation and implement their strategies. 6. Question: what is the significance of having a stop loss in individual trades? Answer: having a stop loss in place for individual trades is critical as it helps to mitigate losses and protect the trading account from excessive drawdown. It allows for disciplined trading by establishing a predetermined exit point if the market moves unfavorably. 7. Question: how can traders use the power of compounding effectively? Answer: traders can effectively use the power of compounding by maintaining a consistent risk percentage for each trade as their account balance grows. This means that as their account increases in value, their position sizes can also increase proportionately, allowing for greater potential profits without significantly altering their risk profile. 8. Question: what caution should traders exercise when using method number 2 for trading? Answer: traders should exercise caution with method number 2, which involves increasing trade sizes while holding multiple positions. This method is recommended primarily for more experienced traders since the risk of amplified losses can escalate quickly if there is not a clear plan and decisive actions are not taken in varying market conditions. 9. Question: what common mistake might traders make when prices start to decline after entering multiple trades? Answer: a common mistake traders may make when experiencing price declines after entering multiple trades is to freeze and take no action. Rather than closing positions at break-even or limiting losses, they might hesitate, leading to worsening scenarios as they miss out on the chance to exit before potential further declines. Chapter 16: Hybrid of Method No. 1 and Method No. 2 Q&A. 1. Question: what is the hybrid method of trading as described in this chapter? Answer: the hybrid method combines aspects of method number 1 and method number 2. It starts with a first trade at a measured position size within appropriate stop loss. If this trade is successful, it is treated like any normal trade. If it fails and results in a loss, it allows for a second trade at a larger position size, assuming the MCD Platinum indicator remains favorable, thus using losses as a setup for future trades. 2. Question: how should a trader react to a losing trade according to this strategy? Answer: a trader should accept that losing trades are part of the process. They should learn from any mistakes, remain calm, and not seek revenge on the market. After a loss, the trader should focus on upcoming signals and maintain a disciplined approach to their trading strategy. 3. Question: what does it mean to use a base lot in this trading method? Answer: the base lot refers to the initial position size set for the first trade. This size is determined carefully to fit one's money management strategy, ensuring that the trader does not risk too much at the outset. 4. Question: can you illustrate how the recovery process works if the first trade is a loss? Answer: sure. If the first trade loses 50 pips with a position size of 0.1 lots, the second trade could be set at 0.3 lots. If this second trade gains 25 pips, the trader would close 0.2 lots, recovering the 50 pip loss from the first trade. Thus, the methodology focuses on gradual recovery without risking excessive losses. 5. Question: what crucial factor should always be considered when employing the hybrid trading method? Answer: money management is crucial when deciding the position size for the first trade and subsequently future trades. Each decision should be made with careful consideration to avoid getting into excessive risk. 6. Question: what mindset should traders adopt after experiencing a loss? Answer: traders should cultivate a mindset that allows them to learn from losses without emotional attachment. It's Important to move forward positively, forgetting the loss and preparing for the next trading opportunity. 7. Question. How does this method aim to reduce the stress of trading? Answer. By having a structured approach to losses and recovery, the hybrid method helps traders mitigate emotional stress. Instead of getting anxious about a single loss, traders can focus on executing their strategy and preparing for subsequent opportunities in a calculated manner. 8. Question. What does it mean to put it out of your mind after a loss? Answer. This means that after a trader evaluates and learns from their loss, they should not dwell on it or let it affect their future trading decisions. Instead, they should focus on upcoming signals and maintain momentum in their trading practice. 9. Question. How important is careful position sizing in this hybrid method? Answer. Careful position sizing is extremely important because it directly impacts a trader's ability to manage risk effectively. It ensures that the trader does not expose themselves to high losses at any given time, allowing for sustainability in trading. Chapter 17. Managing multiple trades. Q&A. 1. Question. What is the significance of FIFO rules in managing multiple trades? Answer. FIFO, or first in first out, rules dictate that trades must be closed in the same order they were opened, which can limit flexibility in managing trades. Understanding this rule is crucial for traders using U.S. brokers as it impacts how they strategize their exits, particularly when dealing with multiple open positions. 2. Question. How does leverage impact trading decisions, particularly for U.S.-based traders? Answer. The limitation of 50:1 leverage for U.S. traders helps prevent them from taking excessively large positions that could jeopardize their accounts. This is a double-edged sword. While it protects novices from devastating losses, it may also limit experienced traders who wish to take larger positions. 3. Question. What is the purpose of a demo trading platform when selecting a broker? Answer. A demo trading platform allows new traders to familiarize themselves with a broker's system and tools without risking real money. This is essential not only for practicing trading strategies, but also for understanding the broker's specific requirements and features before committing actual funds. 4. Question. How can hedging be utilized effectively when managing multiple trades? Answer. Hedging involves placing trades in the opposite direction to offset potential losses from existing positions. This is only advisable in certain market conditions, and it requires careful planning, as you will have to eventually reconcile your positions. Utilizing methods like custom Excel spreadsheets can help track overall positions and break-even prices. 5. Question. What benefits do custom Excel spreadsheets provide for managing trades? Answer. Custom Excel spreadsheets can organize multiple trades and calculate overall break-even prices, aiding traders in decision-making regarding stop placements and overall strategy. They allow traders to visualize their positions systematically and make adjustments as needed. 6. Question. What is a hot tip for traders managing multiple trades and using method number 2? Answer. If the MACD Platinum crosses the zero level, it is crucial to move all stops to overall break-even or consider exit options. This proactive approach can prevent significant losses if trades begin to move against the trader's positions. 7. Question. Why is it important to be cautious with many open trades in one direction? Answer. Being heavily invested in one direction can be risky, especially if the market shows signs of indecision. It is better to exit at break-even if the market isn't moving significantly in your favor, rather than holding on to multiple losing trades. 8. Question. What mindset should traders adopt when faced with uncertain market conditions? Answer. Traders should practice patience and remain open to reassessing their strategies. The market will always present new trading opportunities, and staying disciplined can prevent premature or emotional exits. Chapter 18. Conclusion Q&A. 1. Question. What is the most important takeaway from this chapter? Regarding developing your own trading system? Answer: the most important takeaway is to create a personalized trading framework based on the insights provided in the chapter, Adapting Strategies to Your Risk Tolerance and Preferred Trading Pairs. Start with method number 1 for safety, practice on a demo account, and emphasize money management throughout your trading journey. 2. Question: why is money management particularly stressed in method number 2? Answer: money management is critical in method number 2 due to the higher risks involved, requiring traders to manage their positions effectively to safeguard against significant losses. It ensures that traders can protect their capital while engaging in more aggressive trading strategies. 3. Question: how can traders identify potential trading opportunities using this method? Answer: traders can identify potential trading opportunities by determining the major trend and using the MCD Platinum dots for trade identification and QMP filter dots for confirmation. This approach simplifies the process and reveals numerous opportunities across various charts and time frames. 4. Question: what steps should a new trader take to start applying this trading method? Answer: new traders should start by practicing on a demo account using method number 1, focusing on individual trades. They should familiarize themselves with the indicators and gradually refine their strategies before transitioning to a live account. 5. Question: how can traders stay informed about updates to the indicators and methods? Answer: traders can stay informed about updates by subscribing to Jim's email notifications, which will provide updates on indicator enhancements and promotional events related to his materials. 6. Question: what resources are available for traders to download and learn about this trading method? Answer: resources available include downloadable packages for MT4/MT5 and TradingView, instructional videos for file uploads, and access to a supportive Facebook group for further discussions and assistance. 7. Question: what is the benefit of joining Jim's Facebook group for traders? Answer: joining Jim's Facebook group offers traders a community for support as well as direct access to discussions about the trading methods, sharing experiences, and obtaining timely updates and assistance. 8. Question: what should a trader do if they encounter difficulties accessing the downloadable files? Answer: if a trader encounters difficulties accessing the files, they should not hesitate to reach